Okay, good morning. So a couple of good news. I will keep it short because I'm supposed to finish around 10. So I'll keep it 15 minutes and I will leave a lot of room for questions, which is, I think, more interesting for you. Another good news is that I don't have any video, even if I'm the more digital one among the crowd. But I'll do it like this. And I prepared my speech this morning on the car coming from the Lake of Como to this fantastic place. In the car, I was thinking I cannot make the same speech that I made when I was elected the alumni of the alumni of the year. So I needed to invent something new, but my story is my story, and the YOOX story is YOOX story. So I said, maybe what I can add and I can contribute to this audience, given that I'm not doing it for myself, but I'm doing it for you and for the reunion, for the Bocconi, is to talk a little bit about risk. Because probably, I don't know, at school, and I don't know how much risk is taken into consideration. And so I'm going to try to take you through, let's say, my short experience, life of 15 years, and also a little bit before YOOX, speaking about risk. So I was a young, ambitious guy coming from Ravenna. I didn't go to Bologna University when I was 19. Like all my friends from Ravenna, all my friends, they were all going to Bologna because Ravenna-Bologna is 30 minutes. So it makes a lot of sense. You can also commute. So I decided first thing that I was going to take the risk to go into the big city, Milan, and the big, important, prestigious university, also taking the risk of doing the test and not being admitted. And that was, let's say, my first little risk that I took when I was 19. Then, after the graduation at Bocconi, that was 4 years and a half, it was with good votes, I decided to try to go into merchant banking in order to learn as fast as possible and as much as possible in the shortest time as possible. It was not my favorite job, but I went there as another school. And so I started as an intern in the so-called bank called Lehman Brothers. And and the Lehman Brothers was a great bank, I have to say. And it's been a great experience. I would do it again. But when I was an intern, after 2 months, I was given the possibility to do the admission test, another test, to become an analyst in London. And so much earlier than I was supposed to wait 1 year, more or less, and to get trained in order to do this. But there was one open position and said, would you like to try? I said, let's try. And I tried to, I went through all these interviews because at that time there were, I don't know, 15 interviews. But the problem is that Lehman Brothers is an American bank. And at that time, I didn't know English very well. And because when I was a student, I was studying French as a first language. And so my English was not the perfect one, and actually was not very good. And so I prepared for this interview to become an analyst. I prepared the most likely questions to be asked, the top 100 questions that they asked. So why Lehman Brothers? Why would you like to do the merger? And so basically I memorized, because I always had a great memory, in English, the perfect answer with the perfect English. And I took a huge risk because, as you can imagine, if I was not going to get into this program, I would have stopped also being an intern, and I should have found another career or another job. I got admitted, so like the English memorized worked. Then, at that point, I was at Lehman, 3 years at Lehman, very good salary, a lot of work, a lot of experience, but definitely not my job. And it's very easy for managers that, like you are, then to be in a comfort zone. So if you have a good salary, you have like probably a promotion coming, and then they put you in good hotels, 5 stars, you fly business, and you have like good dinners, and you meet like quite interesting people, not always. Then it's very difficult to jump. At that point, I was in that situation. I said, oh my God, like I have a very good job, even if it's not finance, is not my dream, but I make more money than anybody else, like of my age, more or less. But at that time, I said, no, I'm sorry, I need to take a risk, because I really need to do something that I like, and something that I can build on, and something that basically can be remembered. And so I decided to go to my MBA at Columbia University. At that point, I did the Bocconi, so it didn't make sense for me to do the MBA at Bocconi, given that I did the Bocconi. And so I went to Columbia University. And I took the risk of leaving a job. And after the MBA, I took another risk, because obviously after the MBA, I was offered, I don't know about you, I was offered consulting, merchant banking, big company, Procter & Gamble. So that's what I was offered. But at that point, I decided, no. At this time, I was 29, so it was like 16 years ago, almost 17 years ago. I was 29, I said, at this point, like, I needed to try and to take the biggest risk of my life. So like, without a job, because I resigned, I did a couple of months in consulting after my MBA, but I resigned, I did my business plan, and I gave back the scholarship with a debt. So not only didn't have any money, but I had a debt. And I went around to look for money through venture capitalists in Italy. Venture capitalists in Italy. There are 2 or 3. So that was really probably the biggest risk. And I was not in the Silicon Valley. I was in Italy. And I found, again, I took the risk, but I was lucky to find, after 40 days, the first funding through probably the best and the only one venture capitalist that we had in Italy, whose name is El Serino Piol, coming from Olivetti, from a long history. I founded YOOX in March 2000. The timing was absolutely perfect, because 1 month after, there was the collapse of the new economy. No? I don't know if you remember, but in April 2000, boo.com, so like boom, so nobody believed in the commerce anymore for a couple of years, so until 2003, 2002, 2003. So if I haven't done what I've done, I wouldn't be here, that's for sure, because like 1 month later, if I didn't take the risk before, I wouldn't have found the money from any venture capitalist in Italy or around the world. Then YOOX was founded. I was by myself. I was founder, not co-founder. I've always been by myself. And I found immediately great people to work with. And I went through, with them, I went through very difficult times, because there was the Twin Towers, there was the Lehman crack in 2008. I mean, it's not been, the last 10 years, they haven't been the easiest 10 years of the world. And every time there was a crisis, every time there was a problem, I continued to do my job. And I tried to motivate the people not to be scared. And actually, I have to say, I tried also to push the accelerator. I took more risks. I bought more inventory. When there was the Lehman crack, many retailers like us, they said, oh my God, we're not selling anything. And so they didn't buy, and they bought much less. At that time, in 2008, I remember that YOOX became already #1 compared with others, because we took the risk. We said, okay, now it's the time to push the accelerator, because probably nobody's doing it. So taking risk and also going against the odds is something that brings luck. It works. I believe me, it works. And same story for the IPO in 2009. In 2009, I was facing this decision. So I had a small stake of my company, because I always didn't care that much about how much I own percentage-wise of my company. I only cared about how big is the company. I prefer to have 10% of something which is 4 billion than 50% of something that is 100 million. And I was facing the decision with the board, made of venture capitalists, of selling the company. We got an offer from a big American giant coming from the West Coast that I cannot name, but and obviously the venture capitalists, between selling or taking the risk of going public later on, 6 months later, in a world where in Italy no one was going public in 2009, obviously they were pushing more for selling the company. So I persuade them to stay with me and to follow me and to take the company public in December 2009, so 6 months later. So we rejected the offer and we went public at a much higher valuation, by the way. And so we took this big risk to go public and to be the only one in 2009 Italian company to go public. Then 1 year later, we took the risk of going to China. We have been in 2010, December 2010, that's when we launched China, the first international e-tailer launching into China. So not the Chinese companies, but international companies. So much earlier than any American big giant with much more means, money, and resources and time than us. And we went into China taking a huge risk. 1 year later, the IPO. And again, it was against the odds. It was something that, as an innovator, we decided to go into China before. We knew that we were going to make mistakes. We knew that we were going to waste money. We knew that we were going to invest a little bit more money if we were a follower, but we knew that it was very important to be the first. And it worked. It worked because now China is our highest growth market in our geographic coverage. Then, in the last 3 years, we decided another risk, to invest 100 million in R&D in Italy. So basically in Italian engineers, in Italian software, in made in Italy technology, which is a little bit counterintuitive. No? In Italy, there's a creativity, there's a great product, there are great monuments. Rome is beautiful, is all, like my MBA My MBA friend was telling me, he was American, he was from Texas, I think. Yeah, from Texas. He was telling me the Vatican is awesome. So like I will always remember the Vatican is awesome. So like, because that's the image of Italy. So Rome, the Vatican, but technology is not exactly what we are famous for. So we decided again to invest in Italy and to push the accelerator in Italy. Also in terms of sales, marketing, it's the only country where we did TV advertising. Because, again, it was against the odds. Because in Italy there was like a crisis and everybody was scared. And so we decided that it was the good time to take the opportunity and to push the accelerator. And then finally, I come to the last chapter of our fantastic and fun experience. I've been working on this merger with the Net-a-Porter for 6 years. So like, this has been my dream at the time of the IPO, because it makes so much sense. I mean, it's not like finance, it's something that is the perfect match. It's like really the perfect match. There's nothing that is wrong in this match. And so like I've been persistent and I've insisted. I started in February 2009, then I continue every year. And obviously, sometimes it didn't work, sometimes they said no, sometimes I said no, sometimes it was too early, but I continued, and I finally managed to make it happen. Obviously, it's another risk, because like YOOX was growing 20% happily in Milan, New York, Japan, China. So it's another risk for the company, but I think with a super big opportunity in front of us to really make the number one online luxury retailer. And so this is to say, so going through all these risks to show you what? To show you a couple of things, that I've been very lucky, super lucky. I mean, every time I took a risk, it worked. So I've been super lucky. So I cannot say, I think YOOX is a miracle. But luck comes with risks. You cannot be lucky if you don't take risks. And also you cannot be an innovator if you don't take risks. And sometimes you make mistakes. So the only thing that I can contribute to this audience is to tell you, follow your dreams, take risks, and I'm 100% sure that you're going to be lucky with what you want. Thank you very much.
Thank you. Thank you, Federico. Very inspiring. Questions for the floor, from the floor? Maybe if there are no questions, let me start with one, and in the meantime, I'm sure, otherwise I call up somebody, yeah?
They don't want to take risks.
They don't want to take risks, actually. You spoke about VCs, you spoke about clearly risk and so on. What about people, what about risk in investing in people, in the team, in talent? Can you elaborate on that dimension maybe as well?
Yeah, it's a good point. Like, I think it's another area where we were a bit innovative, in the sense that I mean, one of the guy that now is the general manager of YOOX, I did the interview 15 years ago, so it was right at the beginning. And he was basically a data miner, so like a super good brain for numbers. And like at that time, I knew that e-commerce is based on numbers a lot, information delivery. And while I'm more, let's say, the instinctive slash a bit creative slash business person, I need someone to be my alter ego in terms of numbers. And in fact, the guy, I hired him, and he started as with like head of data mining, and then he built a function called analysis support to strategic decisions, something like this. And then everybody was going to him to ask him about this, about this, about that. And so like he was promoted, and is now the general manager of this company since like I think a couple of years, if not more. So I took a huge risk. So I didn't hire anyone from Boston Consulting.
I always say that I'm very pleased if people join other companies. I'm a bit more, let's say, unease when people from BCG join another consulting company, because that clearly shows that we have a problem. But we say generally that we develop talent for the community, for the industry, and so on. So I'm happy.
No, now in 2015, I've changed a little bit. So like, for example, there are a lot of people from McKinsey, BCG, like working at YOOX. But at that time, it was a little bit different. And actually, we are looking for another one to be in the special force, in the special corp, which is the so-called Office of the CEO. So basically, all the special strategic project that I'm following. So if anyone wants to apply.
So this is a message for the room here as well.
Yes, not for you.
No, I'm probably, there is question, yeah, there. Maybe you introduce quickly yourself and, yeah.
Yes, with pleasure. My name is Gianfranco Luppi. I am MBA 15. Now I'm working in London for many years. I've been in investment banking. Basically, my question is, do you believe the importance between identify an opportunity in front of you, and if you can explain what is the difference between the capacity to identify these opportunities versus the capacity to managing the risk? You don't believe there is some difference? Because sometimes you were speaking about opportunities that were in front of you, and say, you were able to identify these opportunities and to grab these opportunities. In other cases, you just were taking a calculated risk. Do you think it's important to differentiate between identification of opportunity and risk management?
You know, like, unfortunately, I mean, my answer is a little bit terra, which I don't know how to translate it. Now, in the sense that I'm an entrepreneur, and so like I'm not coming from identification of risk, identification of opportunity, calculation of the risk. So the way I work is a little bit more instinctive. So unfortunately, in a way, or fortunately sometimes, I didn't split the idea from the execution, because I was lucky to be in the position of doing both. And so in this case, I personally didn't do this job that is probably very rational, very good to do, but from an entrepreneurial point of view, when you're an entrepreneur, you just do it. You simply do it.
Here there is another one, yeah.
First of all, let me do a wish. I hope next time you meet your American friend, he will say, YOOX is awesome. Well, the question is about risk again. I think what's happened normally is that companies, when become too big, the risk appetite starts becoming low. And in particular, if now you're not, at a certain point you start not being so much autonomous in taking decisions because you have a board, you have shareholders. How keen would your company be, for example, how keen your company would be to take a big risk now, a risk that can make big success or complete fail now?
You're right. You're very right. In fact, in the last few years, I felt myself that I was going to take less risks than in the past. And, but at the same time, I was working for such a big project, which is the merger with Net-a-Porter, that I said, even if now I'm slowing down on this, slowing down on that, I have this big opportunity in front of me, which basically is the main project of the last 4 years and the next 5. And so like, so in other words, I think that with the merger of Net-a-Porter, we proved that even if you are a big company, because we were, before the merger, we were in the mid-40, we were like, in Italy, quite a big company, €500 million in sales, 1.5 billion euro in market cap, so we were not a small company. And now, like with the merger with Net-a-Porter, I think we proved that even if you are a medium cap company, you can still take risk. So, but I'm totally aware of what you're saying, and I think what we need to do more is to tolerate better and to also like, and I speak also about myself, and somehow also to foster the culture of mistakes. So like risk comes with mistakes. And if you are an innovative company, like we are, so we are based on innovation. So if we stop innovating, we won't exist in 10 years, that's for sure. So if we continue to innovate, probably we will be so big that, I mean, like, I will read on the Financial Times that the biggest company in Europe is YOOX. But we need to continue to innovate, so it's something that it's a must. It's not a decision. And so we needed to create all the conditions that, for which all the people in the company, both at YOOX and Net-a-Porter, will continue to innovate and take risks.
Yeah, there is another one there. Thank you.
YOOX, to what I've seen in these years, seems to remain with the same business model of the beginning. So to be, okay, maybe with some change, but generally speaking, to be a retailer of luxury goods. Not having been in consideration, to my knowledge, the possibility to become a direct producer with a known brand, like it is happening, for example, in the organized trade with the private labels, with their own brands. Is something that you have considered in the past, are you considering now, or is something that is out of the strategy of YOOX?
No, I mean, I think that currently, I don't remember exactly the number, but we're talking about more than 20 million unique visitors per month, more or less, in the group, total, combined. And so the audience is big and also very qualitative, because usually there are people that they are high spenders. And so they're not people buying a T-shirt for $20. They're people buying a Balenciaga bag for 500 euros, at least. And so it makes sense also to add to our portfolio of brands our own brand. It makes sense. And we haven't done it because it was not a priority, simple as that, because like the business model has evolved a lot. So for example, we launched in 2007 on top of our own brand, YOOX.com, because for us, YOOX.com is a brand. We launched also Valentino.com, Armani.com, and so powered by YOOX, so which is like a very important part of YOOX, and also like a very tough business for us to be in, because it's a business of technology, it's a business of dealing with the client, it's a business, it's not like, it was not easy, and it's not easy. And so we've been busy, and so it was not our priority. Now, with the merger with Net-a-Porter, I think we have the possibility to be focused also on this, simply because they have it. So they have it already, their own brand, and so probably we can give to their own brand a bigger exposure, bigger volumes, and so we can probably create something bigger than what they have together.
Yeah, there is one there.
Good morning, Stefania Rosanio, MBA 15. Congratulations.
Thank you.
My question, what is the mission, the vision behind your strategy? And I mean in terms of ethical. What are you giving back to the society with your company?
In terms of?
Ethical.
Ethical.
Yes.
Mm-hmm. Ethics.
Ethics.
Mm-hmm. I mean, talking about YOOX, no, and not about Net-a-Porter, because it's too early to talk about this for Net-a-Porter. The merger will be effective around the summer. I think, I think ethics has always been on top of our mind at YOOX for any kind of stakeholders. So, talking about the customer, which is in the end our king. So, it's a customer-centric company, like any commerce should be. And so for us, the customer is at the center of everything. So with our customers, I think in the last 15 years, YOOX.com, so I'm not talking about Valentino.com, Armani.com, because the customers of Valentino.com and Armani.com, they belong to Valentino and Armani. So talking about our own brand, YOOX.com, I think we've been a super, super, super ethical and liberal company. And from any point of view, so from privacy, attention to their desires, to not doing any marketing, which is a little bit borderline, like most of the marketing is, to a very free and liberal return policy. So basically, we have treated them as they were ourselves. And I think that on the other side of the screen, so from the customer point of view, they've absolutely understood that YOOX is such a company for a couple of reasons. One is the retention rate. The retention rate at YOOX is around 70%. So basically, it's something that in the luxury industry, in the fashion industry, doesn't exist. So it's something that is really wow. So basically, the people, once they know us, once they try our service, once they understand that we respect them, once they understand that if they have any problem, we can solve it, which is called also customer service, and not only ethics, but it's a way of operating, rather than stealing money is a way of operating. They stay with us. On the other side, I think when we went public, frankly, the most emotional part of going public was when I read the comments of all of our customers. So the comments of all of our customers, they were amazing. They were like, oh my God, like, great, congratulations. So they were all very admire, And it means that they are happy for our success, which means that they are not, they understand that the company is a company, but behind the company there are good people, and people that they understand them. And that's on the customer level. On the eco level, I think we are probably the only, or one of the very few e-commerce companies that shipped 3 million orders last year with a completely recyclable and recycled packaging, which, frankly, if Amazon was going to do it, would be a better world. And especially given that it costs more. So this kind of packaging costs more. So if you do it because you really want to do it. And then I have like on the workforce, I don't know, on the workforce, women versus men. I think we're one of the few Italian companies where the salary of the women is very much aligned with the salary of the men, which is something pretty unique, not only in Italy, but I would say around the world. We are doing a sustainability report. It's on yooxgroup.com, and where there's all of our ethics, and you can go there and watch it, and there's everything in there. So it's a very transparent report. Thank you.
There's one there.
Good morning, Andrea De Logu, MBA 30. Hi, here.
Hi.
Hi, ciao. I'm curious about the investor side of your story, and to understand how difficult it is for an entrepreneur to provide the majority of the share to an investor. So to decide to leave the majority to an investor, and also how difficult it is then to manage them once they are inside with the majority. So that's my question. Thank you for your experience.
It's a state of mind. I think it's a state of mind. I think probably the Italian capitalism is a little bit more family-oriented, so they want to keep the control. I would say probably in the Anglo-Saxon world is a little bit different. So YOOX is a little bit more an Anglo-Saxon story based in Italy in terms of the shareholding and the investor base. As I said, first of all, I cared only about to make it big and to make it successful. And so like it was impossible, given that I didn't have any money, zero, actually I had debt. It was impossible for me to even think to keep the control. So it was not like a decision. And every time I was doing a capital increase, I was doing it diluting myself, but with in mind the fact that the company will be more significant and solid and also built to last. Because if you are small in my industry, it's getting tough. And so sometimes like the size is also important for longevity. And so again, it's important if you have 10% of something that will last forever, is better than to have 51% that maybe will die tomorrow. How to manage them? But I managed to keep the governance. So like even if I lost the control basically from after 3 years or 2 years, I managed to keep the governance with obviously a proper, reputable board to which I bring the budget, the business plan, the big ideas, and there's obviously there's always a dialogue, but at the same time the governance has always been very clear and the leadership has always been very clear. As much as I can bring results. The day I won't bring any more results, I will be probably the first one to realize that. And there are like tons of successors in our company that can take my job successfully.
Andrea.
Yeah, a quick question. I mean, you are leading really one of the fastest growing group in the country now, and I believe in some way we don't really have many entrepreneurs with this kind of challenges you're facing. So the question is very simple. How do you strike a balance with your private life?
So, for example, I'm watching the time because I wanted to go back to see my daughter. and
you have 5 minutes left.
And that was the reason why I said that I'll keep it short. And no, like I think I mean it's not easy. It's not easy. So I cannot say that I found the perfect balance. No, I didn't find the perfect balance. But at the same time, I think that I have a little daughter and a wife. They live on the Como Lake. So I commute to Milan when I work in Milan, or if I go to London through Malpensa. I try to spend the weekend with them, for sure. Sometimes I have to work a little bit, but not extensively. I try to do breakfast every morning with my daughter, at least, when I'm not traveling. And when I can, I read the stories, not on iPad, not on any digital device to my daughter, but only on printed books.
Thank you for being with us today, Federico.
Thank you.
Any other one? There's one in the back, and I think one over there. I think I would say the last couple, probably, huh?
Federico? Hi.
Yeah.
Beppe from MBA 30. So the question is how you convince people at the beginning to take risk with you when you were at the early stage of the company, and how much time during the years you dedicated on building the team, attracting people versus just maybe signing new deals or taking care of the commercial part of the company.
I take only the first one to leave the room to the other one, because we have only left two. So the first question was how to take risk. I think that you needed to be a believer. So if you really believe a lot in what you're doing and in your project, and so like you're a dreamer in a way, I think you become a very, very, very good salesperson. So I've been a very, very good salesperson with the brands. So I remember the first ones that I met them that I didn't even have at the website, and I didn't know them. So I really just asked for a meeting. So I said, my idea is this one, I'm doing this for the company, for you, for the customer, this, and probably I made them dream with me. So I think, but the only way to do it, I think, is if you really believe it. Because if you are just paid to sell it, I think it's tough. If you are a dreamer and you believe in your dream, and I think you can also, as a calamita, you can also like attract people, and that's what happened. That's exactly what happened. So like I went there, I spoke about my dream, and most of them, they dream with me. So I have to respect also, I have to say the fashion industry, I've been an outsider, so my family doesn't work in the fashion industry. I've not worked in the fashion industry, if not like, I don't know, at Lehman Brothers I was pitching for IPO of luxury goods, but it's a little bit different than working in the fashion industry. And so I've been completely an outsider. And usually they say, oh my God, the fashion industry, they are so arrogant and they are so closed with each other, they don't let, it's not true. I'm the perfect example of someone that was an outsider and convinced them to come on board with me.
Last one, I think, was in the back, yeah.
Good morning, Pietro Magnoni, MBA 35. My question is about the trends that you see for the next few years in the way to do digital commerce and manage the digital relation with the customer.
Sorry, I didn't hear.
Sorry. Is about what are the main trends that you see for the next few years in the way to do digital commerce and manage the digital relation with the customer?
One trend that we all see, but thank God YOOX has seen it in 2006, so it was a little bit early, was the smartphone. So like in 2006, I told probably the most brilliant guy that we have in our technology, Fabio, you take care of smartphone. It's going to be big, so do a special task force, start learning, start investing. You are the smartphone of the future of this group. And that's what happened in 2006. In 2006, we had from smartphone probably 3–4% of traffic, if not even less. Now we have 55% of traffic coming from smartphone to all the websites. So this is definitely a trend that won't stop, and actually it will continue month after month, and probably in 5 years the desktop will be a minor component of our traffic and our business. And another one is probably cross-channel, so like, which is given that we operate on behalf of the brands some of the online flagship stores like Valentino.com or Armani.com. What we see is the next trend is also to help them to integrate seamlessly the physical store, so the physical store in Via Monte Napoleone to the online store that we operate, in order for the customer to have one experience. So wherever you go, you are the customer of Valentino. If you go online, if you go to smartphone, if you go to Via Monte Napoleone, if you go everywhere you are one customer, treated the same, with the same service and with the same attention.
Thank you very much, Federico. Thank you.